Mandy, thank you for that. Let's continue the conversation on India and bring in Somnath Mukherjee, CIO and Senior Managing Partner at Ask Wealth Management. Somnath, how exposed is India to headline reciprocal tariffs?
Significantly. Good morning to you and your viewers. India is actually fairly significantly exposed to reciprocal tariffs, not just because of the trade side, which is significant, especially in areas like auto anchs, pharmaceuticals, and so on and so forth, but also on the services side. It's a rather lesser known point that India is one of the few major economies in the world that enjoys a significant services trade surplus with the US. US is a large merchandise trade deficit country with the rest of the world, but it also enjoys a very large services trade surplus with the rest of the world. India is an outlier in that sense, that we enjoy surpluses on both sides of the trade, both merchandise as well as services. So it's very important that India arrives at a modus vivendi of sorts with the US. Otherwise, the impact can be quite significant. But the good news is that there is work happening, and there are multiple levers that India has to balance the trade, to arrive at a decision, as your report just mentioned. There is back-channel work happening. Some of it is now in public domain. President Trump mentioned it in his own style yesterday. So I am less worried about a major negative macro impact, but certainly it is something that is of great importance and has to be solved as far as India is concerned.
Thank you for that. And let me bring in that duality, because on the one hand, India has been identified as one of the countries in the Dirty 15, Scott Bessant's list, that could be targeted by tariffs. And on the other hand, as you alluded to, we have the BTA, which is making some progress, the bilateral trade agreement. So on balance, does this take the sting out of the tariff narrative for India, or is Nifty 50 vulnerable to a move down to 23,000?
No, I think the base case is that a modus vivendi will be arrived at, because, as I mentioned, India has multiple levers to balance the trade with the US. One, energy. India is the world's second largest energy importer, and swapping some of our imports from Africa or Middle East or Russia to the US will be expensive at the margin, but certainly possible, well within Indian means. Second, recapitalization of Indian military is something that is anyway all the geopolitical threats around us today. And a lot of the discussions around recapitalization, import of new weapons, etc., are with the US. And again, another lever that can be used to balance the trade. Add to it the fact that the BTA is well underway, and something that is acceptable to both sides is likely to get worked out. You add all of that, and it's not such a bad scenario, and adds up to the base case that a modus vivendi will be arrived at. Last but not the least, important to also note that India is one of the few major countries that form the ideal Trumpian ally, if I may use that word, because one, India is not dependent on US military for its security. India is a net provider of security in the Indian Ocean region. Our defense budget actually is one of the largest in the world, the third or fourth largest in the world, which makes India's contribution to security a net addition to world, as opposed to a lot of the angst that Trump has with his European allies on freeloading or sort of piggybacking on US military for its own security. So if you take that holistically, the whole geopolitics of it, along with the fact that there are multiple economic levers at play, I don't think the scenario is too bad at all for India.
So that's a very interesting context, geopolitically speaking, and I'd really love to know what it sort of means for investors in the market, because we were speaking, Somnath, earlier with a guest from Russell Investments who is underweight India, and he said, look, like everybody agrees, it's got some, really good sort of fundamental macroeconomic tailwinds going for India, but at the end of the day, even though it's come down a really long way from the early October highs, it's still just a valuation issue. Would you agree that at this stage it's still looking a little expensive to really load up on India and start getting bullish again on the market?
That's I think a fair point. I think valuations, if you look at it dispassionately and look at it, and more importantly, more than dispassionately, if you look at it with a short-term tactical lens, yes, I mean, they might seem elevated, especially if you compare them against some of our neighbors, certainly against China. However, the real story about India is not the next 3 months or 6 months view. The real story about India is it's one of the few capital markets, a few equity markets in the world that delivers close to double-digit dollar returns over long periods of time. Actually, the only other major market that does so is the United States. Everybody else is much lower. So the allocation to India is not a discretionary affair from a tactical perspective. Yes, managers who have a certain allocation to India, is this the time to go overweight? And if somebody takes a valuation call, it's, I think, a reasonably fair call. But that's just a 3-month, 6-month, 12-month view as macros of India, whether it is inflation, current account deficit, the fisc, are all in amazing shape. In fact, they're some of the best numbers that we've seen in many, many years. It's just that the growth drivers have slowed down incrementally a little bit. And secondly, we've had 4 years, 2021 right up until October of last year, really gangbuster growth, and something that has not been replicated in any other economy, maybe with the exception of the US markets. And so it's sort of taking a bit of a breather. Does that breather continue for some more time? Maybe. However, we saw this in March. The Indian market sort of, had a very sharp pullback rally as well. So, long and short-term view, somebody takes a relative valuation call, I think it's a fair point. But over a longer period of time, India is an unmissable market. It's the best performing emerging market by a long mile, so you can't stay away.
Really great information. Thank you so much for joining us today, Somnath Mukherjee from Ask Private Wealth. Sri, I'm going to hand it back over to you.
Yes, that's all we have time for in this edition of Street Signs.